Well, good afternoon. Sorry for the late video this week. It's Sunday, February 5th, and it's time for my weekly recap here from CoinRoutes. I'm Dave Weisberger, the CEO, and let's talk about the market action. I titled this The Sound and the Fury Signifying Nothing because that's more or less what happened during the week when the Federal Reserve talked. As widely expected, they raised rates 25 basis points. We sort of expected Powell to talk even more hawkishly than he did, and the markets were a little bit relieved, but the market action was muted. If you look back a week, Bitcoin is still trading right around 23,000. Ethereum is still trading right around 1,600, maybe a bit better for Ethereum than Bitcoin, but the markets really haven't moved a whole lot. And that basically makes sense. We're in this digestion phase of the big move up, and the markets are basically in neutral territory. As I've said repeatedly through every week, really, certainly recently, I'm still extremely bullish about Bitcoin. We are still plumbing new all-time highs or close to the all-time highs on the hash rate, miner difficulty, network adoption, and all sorts of metrics. And the price action is holding in here quite well. I've told people multiple times that I believe the most bullish thing that can happen is to stay in a tight trading range for a little while as the market digests this and we wait for the next catalyst. So, what really is going on in this market is essentially we are sitting right where we were. And there's not a whole lot that's going to happen until it becomes very, very clear what the next catalyst is. So let's talk about a couple of things that could be catalysts. Where the debt ceiling argument is basically been kicked for a few months, but there's even more chatter about the platinum coin or other sort of methods that they could use to try and solve it without congressional help. My opinion on that is pretty straightforward. If they manage to keep spending going without getting the congressional Republicans to do anything, or by using a gimmick like the platinum coin, I think you'll see Bitcoin in particular explode as people see it as a sound money refuge. I also think that it will explode because all risk assets will do well because it will signify more money coming into the market. Now, that of course assumes that the Federal Reserve doesn't do anything to counteract it, but I doubt that that would happen. As much as they are fighting inflation, I think they're far more focused on consumer inflation than they are on asset inflation, which is really more or less going back to the way it was for the last 3 decades. So, while we're not going to know how all this plays out for a few months, right now, things seem reasonably well grounded. Does that mean we won't get a correction from these levels? Of course, it could happen. I would expect to see any downside somewhat muted unless there's a major geopolitical shakeup. That's pretty much it from the market perspective. It's still relatively the same setup. There are a couple of news events this week, however, that are worth talking about. The first is a damning report on Celsius. Now, viewers know that I don't tend to comment on Celsius as they were a client of CoinRoutes and they actually invested in CoinRoutes. So I'm not going to editorialize upon the report, except tell you a couple of things the report included, which it more or less concluded that at least the report from this particular report is alleging what could only be described as fraud, insofar as they allege that Celsius was non-profitable for quite some time before everything blew up. They allege that they covered up those losses, took dramatically more risk in the world of unsecured or under collateralized loans, and even more trading over the period of time leading up to the bankruptcy. And that is a very big problem. It also alleges that the leadership of Celsius, Mr. Mashinsky and others, used the CEL token more or less as a corporate piggy bank to kind of give them the leeway to keep doing what they were doing. And at the same time, they even allege that the executives took money out of the company in the form of cash. Now, if all of this is true, it is going to lead to severe consequences. But not being a lawyer and not really want to comment on it, what I will say is it's remarkable how consistent the story is with what we are learning about FTX. FTX was more spectacular insofar as, in addition to everything else, they were also using client funds, or so it seems, in order to buy off politicians and make themselves look much bigger than they were via Super Bowl commercials and having their names plastered on the side of stadiums, etc. But the fact is the same. We have bad actors that operated pretty much without a lot of check in the crypto industry. They had the ability to do and take customer funds for their own uses, and they have yet to be brought to justice. Now, Sam Bankman-Fried, of course, is awaiting trial, so we'll see how it goes. But it is important to understand that this sort of bad action is something that is extremely damaging for so nascent an industry. If you look at other alleged bad actions of a similar scale, there's a certain Indian billionaire who there have been multiple allegations made by short sellers about him, and the story is just starting to come out. But over somewhere in the neighborhood of $60 billion of market cap or market value was wiped out over the last week or two. That no one's talking about, even though the magnitude is more or less the same. But that's because it's happening in a global equity market, which is obviously substantially larger and more established. Why am I making this point? I'm making the point that if one wants to denigrate the entirety of the crypto market, as certain people are doing, certain senators and congressmen, people who keep talking about it, what you end up with is essentially a jihad against innovation. And you're using the same thing that happens routinely in other markets in order to make your criticism. I don't think that's fair. To juxtapose that approach to what's going on in the UK, though, is actually very interesting because in the UK this past week, they put out a consultation letter, which would essentially give crypto regulation to the FCA, which is their primary financial regulator. I personally was registered with the FCA when I lived in London. It was actually the very first registration in the financial industry that I had. And that particular consultation, while the details need to be dug into, there will be a lot of back and forth, really started from first principles, specifically talked about the need to handle and disclose risk management, how all operators should, in fact, disclose how their operations work. They should disclose how their financials are being represented and handled. And it should disclose how they attempt to control for market manipulation and market abuse. Wow. What a commonsensical approach. It is no wonder that the industry is looking at this and saying, we welcome this because these first principles are what the industry needs to move forward. Keep in mind, if these principles were enshrined in law in the United States, it's pretty unlikely that either Celsius or SPF, FTX would have been able to operate here. Certainly, it would have made it much, much harder. But we'll see how this story plays out. At the end of the day, what's important here is something that I have been talking about, and people like Hester Peirce, Commissioner Peirce, have been talking about. There is a desperate need for principles-based regulation and regulatory clarity here in the United States. But we're not getting it. And if you want to understand we're not getting it, another story that came, and the last one that I'll talk about, which has nothing to do with crypto, but is still interesting, was Commissioner Peirce's dissent on an order entered against a publicly traded company, it turned Activision Blizzard. And her dissent was basically grounded on the fact that they fined the company, I think it was $35 million, for technical violations without any allegation of investor harm. Now, why do we dissent to this? Well, we dissent to this, I at least agree with her reasoning. It means that people or companies don't want to go public because they take on extra risk. It means that even if they try to do right by investors, they take on extra risk. And ultimately, those fines get paid by the company, which hurts the investable value of that company, i.e., hurts investors. That seems to be what is the modus operandi for our securities regulators these days. And it's exactly the opposite of what we want. Now, it's not crypto, it happens to be in the equity world, but the reality is it's that same approach. Not putting investors first, not putting market integrity first, but worrying about how to go after companies and try to basically collect fines for the SEC and exercise power. That seems to be what's going on more and more these days, and it's exactly the opposite of what we want. Well, that's enough of a rant for one day. Have a safe rest of the weekend, everyone, and have a good week coming up.